Right now, there's a lot of hoopla about the stock market. Has Trump triggered a recession? Should everybody be getting out of the stock market as quickly as they can? If we read the news or look at social media, there's a lot of wild opinions out there. Everybody's wondering, should I sell my stocks now before they fall even further? Here at Lock Stock Finance, we've been carefully analysing the situation, and today I'm going to give you my honest take. We're going to look at what's causing this crash and, most importantly, what you can do to benefit. So, what's actually happening? The stock market seems to be plummeting and investors are getting nervous. Throughout history, every market crash has been sparked by something, and in this case, the market crash has been sparked by three things. The first spark is Trump's radical new trade policies, particularly the tariffs he's trying to introduce. This has been described by many people as a trade war. In an effort to boost manufacturing in the US, Trump is trying to introduce large tariffs on foreign imports, which are basically taxes on imported goods manufactured in other countries. These include a 25% tariff on all goods from Canada and Mexico, and a 10% tariff on all goods from China. The last time the US tried introducing such sweeping tariffs, it actually triggered the Great Depression of the 1930s. The idea is, by making foreign imports more costly, US companies will be forced to manufacture in the US, which will provide jobs, boost the domestic economy, and reignite the manufacturing sector. The problem is that other countries are fighting back by placing their own tariffs on US goods, making it harder for US businesses to sell their products overseas. This causes the overall levels of trade across the world to slow down, which is what happened during the Great Depression of the 1930s, leading to widespread poverty and the loss of millions of jobs. The other problem is that lots of US businesses rely on foreign imports. For example, Trump raised tariffs from imports of Canadian steel and aluminium to 50%, which not only damages one of Canada's main export industries, but also radically drives up prices for US businesses who rely on Canadian steel and aluminium imports. Since it's going to be costing businesses more to import their goods, they all have to raise the prices of their products to compensate, which, unfortunately, will hurt the everyday consumer who will have to pay more for products. The fact that trade in general has become less lucrative means that the supply chain itself is disrupted. This means that everyday essentials like food and energy will become more expensive as well. The tariffs are forcing other countries into new trade alliances so that they'll be able to bypass the US completely, which will hurt the US consumer even more and destabilize the US position as the dominant economic force in the world. Have you heard of the BRICS alliance? The strategic partnership between China, Russia, India, Brazil and South Africa, which is trying to usurp American trade dominance. These tariffs will likely give a huge boost to the BRICS alliance. To summarize, Trump's trade war is likely to lead to higher prices, a weakening global order and a faltering economy. And all of this is leading to nervousness in the stock market. A strong stock market means that investors feel confident in it, and all this unpredictability is causing investors to lose their confidence big time. The second cause of this stock market crash is Trump's radical stance on NATO. NATO is a military alliance of 32 countries in North America and Europe committed to collective defense and security cooperation, originally set up to counter the threat of the Soviet Union during the Cold War. You might have heard of Article 5, which is part of the NATO treaty that states that an attack on one member is an attack on all. Now, Trump has been openly critical of NATO, stating that other countries have not been paying their fair share. He's put the US commitment to NATO into question. Now, Trump's criticisms have been successful as they've caused many NATO countries to massively increase their defense budgets. In this respect, you could argue that Trump's criticisms have been a good thing. However, since World War II, the world has relied on the US to be the world's peacekeeper, so any suggestions that they might be willing to step back from that role lead to massive uncertainty, which investors hate. A weaker NATO may give Russia the green light to keep trying to expand westward, which might cause new conflicts to arise. All of this will lead to even more unpredictability in trade, as well as an increase in energy prices. And since energy is the backbone of the economy, that will affect everyday life. Some experts actually believe that Trump is intentionally crashing the stock market as a way to lower the Federal Reserve's high interest rates. If a recession looks like it's inevitable, the Federal Reserve will be forced to slash interest rates to prevent a total catastrophe. You see, high interest rates slow down the economy as they cause businesses to borrow less money and take less risk, and people stop spending so much money. Trump is obviously all about growth, so he wants to do whatever he can to cause a boost to the economy. You see, the US government is hugely in debt, $36 trillion of debt to be exact, and the interest payments on that debt are through the roof. If interest rates drop, that will make it easier for the US government to pay off its debt, since they won't have to pay so much in interest. In fact, it will save them billions. If this is in fact Trump's grand strategy, that could mean that this won't be a recession after all. It could be a temporary blip before a huge rebound. Which leads us to the important question, how can you profit from this market crash? Market crashes have happened regularly throughout history. There was a crash when the pandemic first happened. There was a crash when the 2008 financial crisis happened. And there have been plenty of crashes before those. But the market always bounces back. Lots of people tend to panic and sell their stocks during this time, which causes them to lose money. But savvy investors see this as the perfect opportunity to invest. Stock prices are discounted during market crashes, so if you can buy them at these low prices, you stand a good chance to make a lot of money when the market bounces back. There are three categories of dips in the market. The first is corrections, which are typically 10 to 20% drops. The second is bear markets, which are typically 20 to 40% drops. And the third is collapse, which is more than a 40% drop. The bigger the drop, the bigger the potential for you to make a lot of money. So, if this does indeed turn out to be a full-on stock market collapse, that means it has the highest potential to make you a lot of profit in the long run. I just want to stress that all investments are speculative, and you should never invest more than you can afford to lose. And most importantly, always keep an emergency fund of savings for emergencies. But if you do have some money that you're able to invest, a stock market crash could be a perfect time to do it. Look at this graph showing the 2008 financial crisis. Notice how dramatically stock prices fell and how quickly they bounced back. Imagine how much profit you would have made if you'd invested here. However, trying to time the market is easier said than done. Lots of expert investors, including myself, recommend following the ABB principle instead, which stands for always be buying. That means investing a set amount of money in low-cost index funds every month, no matter if the market is high or low. That way, you'll ride out any potential fluctuations, and in the long run, your investments are more likely to trend upwards. Also, don't forget to diversify. You never want to have all your eggs in one basket. Ideally, you want to have your investments spread across lots of different sectors, asset classes and regions. That way, if there is a steep downturn in any one area or sector, your portfolio will stay afloat. If you'd like to learn more about exactly how to invest in 2025, watch this video here, and please like and subscribe if you enjoy the content. And don't forget to put any questions in the comments and we'll aim to get back to you. Thanks for watching. See you on the next one.